Yeah, look, I think restaurant discovery absolutely is a big portion of the equation. Part of the reason DoorDash has been so successful is they aggressively rolled out markets without even bothering to partner with the restaurants. And so you effectively had what amounted to be a pretty terrible customer experience, but at least you could find every restaurant you were looking for. We've seen other people, at least initially be successful with a more partnered strategy like a Waiter Holdings. And then you have a GrubHub who has done on the delivery side now, they're getting more into Grub delivered, but, with the partnership they have with the restaurants, that's really been kind of their bread and butter. And I think, as consumers are now starting to adapt to the fees that they're starting to see, we'll see how the landscape evolves from here. But yes, restaurant discovery has clearly been a big driver of which ordering service you use. And
speaking of an evolving landscape, GrubHub has been profitable for the first 3 quarters in 2019. We talked about that share price run. The company, though, denying that they're going or at least actively engaged in a sale process. But you think, well, it's going to happen anyways. Tell us why.
Look, this space is ripe for consolidation. We're seeing it in the UK. I think everybody knows that there's a whole bunch of subscale players out there that need to be consolidated. I'd point out that GrubHub's been profitable for a long, long time. I would also say that, the company has been pretty out there saying, look, if somebody comes with a great offer, we'll entertain it. But you've got DoorDash losing roughly $2 per order in EBITDA, with GrubHub now kind of following DoorDash's strategy and taking share back, still making over $1 an order in EBITDA here. So, at some point, either Uber and DoorDash need to show a path to profitability organically when they're already having higher fees, or the space is going to need to consolidate because it just simply can't contain this many large players. I think there's plenty of room for, say, 3. I'm sorry, go ahead.
Is the driver of that this is fundamentally a commoditized business? That one delivery service is basically another. There are some differentiators. You cite the idea of the partnership between GrubHub and the restaurants, but is it basically a commoditized business?
It can be at its most basic form, but one of the reasons that attracted us to GrubHub as sort of an interesting investment idea in the first place was the technology advantage. I think that you really do have to differentiate yourself. And with your partners, you need to be able to provide value to the restaurants in order to have sort of a long relationship. Another big differentiator is the fact that only 10 to 15% of GrubHub's orders come from QSR, whereas you've got DoorDash maybe of upwards of 50% of their orders coming from, a $10 takeout at Wendy's on a subscription model. I don't know how you make money there. So, yes, it's great for the consumer theoretically up front. If you take a DoorDash and then maybe you use Uber Eats. But at the end of the day, in order for the restaurants to make money, the consumer to be happy, you need to find kind of this happy medium. And obviously for investors to be happy, you need to be able to prove that you can make money.
You talked about how GrubHub is making money and has been profitable while some of these other players are losing $1 or more per order. How does it work then with the commissions between GrubHub and the restaurants, and what are they doing right that maybe other delivery services should or could repeat?
So I would argue maybe that the loyalty and perks program that GrubHub is offering, it's clearly taken an investment toll. I mean, there's no way to cut it other than to say everybody thought that GrubHub's EBITDA would be a lot higher in 2020 than it was. And then they said, look, we're going to go after growth. We're going to go after market share. We got to make a bunch of investments to be, forward facing with our operations, build out markets, build out, these non-partnered agreements, build out the loyalty and perks program. And I think that it's kind of that two-way relationship. I've heard a lot of arguments from people telling me that, the economics aren't sustainable on the commission front. I think you have to view it as an advertising business. I think that you have, especially in New York, Courtney, right? You're spoiled for choice. You can go to any restaurant and everything's open all hours of the day. And so how are you going to choose? Well, if you're a restaurant, I think you look at that optionality and you say, okay, if I want more orders at, 12 o'clock at night, maybe it behooves me to partner with GrubHub on a more aggressive basis and try to get more orders during this particular season. Or I know a taco shop down the street just opened up and I want to make sure that I maintain my customer list. So I really think it is about that partnership between the restaurant and the ordering service that will play a part in, that side of the equation. Whereas on the other side of the equation, obviously on the consumer side, A lot of it's going to be about fees. A lot of it's going to be about free delivery. How sustainable is that? And, those questions, I think, really just haven't been answered yet because, frankly, DoorDash and Uber haven't had to answer them.
Very quickly, we're about out of time here, but I know you have a buy rating, but a $42 price target, and we're sitting at $56. What's your recommendation from here? You need to update those?
Yeah, look, I was expecting you to bring that up. It's early in the new year. We're obviously evaluating everything, but I would say that we've been very constructive on the name and continue to be. I think it's, a name that is really going to be a staple in this space. As I said, there's going to be consolidation. It feels like maybe down the road they end up being acquired by maybe an Uber, maybe not. Who knows? Certainly as a standalone, I think they can take back share with kind of the path that they're on now. But I think just like everybody sort of maybe overreacted originally and the stock went down to 33 and we were constructive then, there's really nothing other than kind of this incremental M&A premium that's back into the stock that would sort of change our opinion about being constructive about Grub, even at these levels, I think.